Hey everybody, Jake here with Jake Wu Market Research to go over the weekend video after the first week of 2024, which was a little bit of an interesting week, but that's kind of what you get after 9 green weeks in a row. We got a little bit of a pullback to start the year. You know, that's really all it is at this point. So for this video, we'll be going over the futures names, ES and Q, CL. We'll touch on Bitcoin and then just go over NVDA, Tesla, Apple, and AMD. So this will be more of a quick video, an overview of things as we enter the new year. Remember, if you are interested in more detailed analysis, I will be coming out with my full weekend analysis, written analysis for Twitter subscribers later tonight on Saturday or into Sunday morning. So if you are looking for daily and weekly candle analysis going into the second week of January, definitely click on the link in the video description to sign up to my Twitter or X subscription. It's $10 a month. I go over daily analysis on a wide range of names. I share trade ideas and really just overall market comments and how things look going into the new week, into the second half of the week, all different things like that. Also, I do have a partnership with Optimus Futures. So if you do trade futures and you're looking for a potentially new broker to check out, I do have a partnership with them. I'll put the link in the video description as well. As I mentioned, that's Optimus Futures. You can actually tie them into TradingView, so you can be on TradingView while executing through them as there are a lot of different brokers you can do that with on TradingView, but this is one that you can also do that with as well. So definitely check out Optimus Futures if you are a futures trader. So let's jump into it. As I mentioned, we did get a pullback across the board for the most part. And as I mentioned, that is what's eventually going to happen. The market, unfortunately, does not go straight up. It closed 9 weeks green in a row. So that means that essentially the weekly close was higher for 9 weeks in a row. When you have that, from a psychological standpoint, a lot of market participants, especially maybe newer traders in the market, really, forget that the market does pull back. And honestly, when the market goes up that much, you really do end up having some pretty strong pullbacks because everybody's got profit. And then as soon as you get a pullback, everybody starts taking profit at the same time. Everyone panics a little bit. They haven't seen red in essentially 9 weeks. And so that's what you get. This is something that I was pretty vocal with on Friday, the last trading day of the week with subscribers. I mentioned technically we were due for a pullback. However, there's a lot of longer term setups that look pretty good. And the thing is, you can have short-term setups that need a pullback while the longer-term setup looks strong. Just because something's pulling back on the daily chart doesn't mean that the monthly candle doesn't look good. Doesn't mean that the longer-term candles, even the quarterly candles, don't look good. So definitely know your time frame because a lot of people get mixed up on, what exactly am I trading? Am I trading the daily chart? Am I trading the monthly chart? And so that's one of the main things, as a trader, you should know is what time frame am I really focused on? Am I worried about a week of pullback, or is that going to not really change my thesis at all? So that's just something I wanted to mention. Now, what we did have on ES, we did have a little bit of a pop above the previous all-time highs, a little bit of an oops moment there, if you will. And then we got a pullback right to this breakout VWAP. So the breakout VWAP was from the week of December, the first week of December of 2023. And you can see here for now that we did bounce off this VWAP. So for now, just a pullback to the VWAP, almost essentially a mean reversion here. So if we do get a weekly close below that VWAP, which is currently at 47.2625, then, we could be potentially in for a bigger pullback to retest these previous highs, which would essentially just be an SR flip zone. Those highs range from 45.89 to 46.31. Same thing here with NQ. It was literally 9 weekly closes, green weekly closes in a row. So you are going to get a pullback eventually, and that's what we got the first week of January. And this is one that did actually break below its VWAP from this breakout candle. So you can see here that we definitely closed below it. So is tech in for another pullback into the second week of the year? We'll just have to see. But if we are, this SR flip zone below from 15,850 all the way up to around 1663 would be a potential downside target there. And As just a reminder, when I do go over the names in the Twitter subscription, I usually just use SPY, QQQ, IWM as proxies. I'm not really focusing on futures, but I do like to look at the futures here just because they're extremely liquid and something to look at. A lot more people trade the ETFs versus futures for the most part. If we were to get some type of bounce here, the previous highs, the previous all-time highs are from around 17,050 all the way up to right around 17,175. Crude oil has been interesting here. So we're looking at crude futures really just chopping around. We haven't had much trend at all over the last really 5 weeks. We're just kind of trading right below this previous support zone. It has now flipped to resistance multiple times. It did the last week of December, and then it did actually the week before that. So you can see that this is an SR flip, meaning that the previous support zone is now flipping to resistance. And until we can get above and close above that trend zone, we're just going to be kind of chopping around within this this range and within this area below this trend zone. If we do get any type of pullback, the 66.80 to 67.35, the previous lows pretty much from June of 2023, are the levels below that you want to keep an eye on. And you can see here back in late May, mid-June, late June, and then pretty much the end of June, all of these wicks were really right within that area. So this was definitely an important area during the summer months to keep an eye on as we bounced there multiple times before we had that huge run up into really fall. So going into next week, decent candle here, not a bullish engulfing because the body of this candle for this previous week did not technically engulf the bottom of the body from the previous week. But all in all, a pretty strong candle going into the week ahead, but not a ton of edge here as we just kind of trade in this range and right below this previous support zone, which is flipped to resistance. Now, talk about a crazy candle. That is what Bitcoin is known for. We have had quite an interesting week here as the ETF becomes a popular talking point in the crypto markets that everybody is anticipating. And if you look at this candle, pretty much that has not closed yet. I'm doing this video on Saturday. This candle has essentially taken out the last 4 weeks. So pretty much the range of this candle, the low and the high, are both higher and lower than the last 4 weeks of trading. Give or take, actually, sorry, that could be slightly wrong on the lower part of this. Let's zoom in. So I guess for this, I think I may have misspoken. Yeah, this did not take out the low from the week of the beginning of December. However, it's pretty close. But either way, the last 3 weeks ranges were taken out. Interestingly enough, as always, the VWAP from any breakout point was very relevant this past week as we bounced off this VWAP zone. And the reason why I use these VWAP zones instead of just the VWAP is to capture, some of these wicks that did not get all the way down to the VWAP. So if I take the percent offset off, you'll see that we've only really tested that VWAP once. However, you can see that there's a lot of wicks that did almost test it. So I want to capture those because those are still relevant. So when I do that, I create an upper band. So I'm on the VWAP settings. On the input, I have a 2.5% band. So that means essentially I have another VWAP 2.5% above the original VWAP. And then that captures those wicks and those candles. And you can see here that that's essentially right at the top of that VWAP zone is where we bounced on that flush that we had earlier in the week. So all in all, relatively strong candle here, but the main thing that we're focused on is this 45,900 to 48,200. That's the previous highs that we saw back from March of 2022, even in February of 2022 as well. That's what this zone is a function of, is the highs from February and then the highs from late March of 2022. So if we can get above 48,200, that will definitely be a status quo changer here for a potentially new breakout going into the new year. NVDA, we'll go over 4 individual names here. And, when NVIDIA has really not made much of a move, it's really hard for me to to think that this pullback in the market is any more than that, just a slight pullback after a huge move. If we really had a big pullback in the market, you really would see leaders like NVIDIA, I think, pulling back a lot more. So the fact that we held above the October pivot VWAP zone and barely closed red for the week. I mean, we closed a little red, but not that much. But we're still having trouble at this previous all-time high zone, pretty much ranging from 500 to 505.50. And until we can really break above that, we're kind of range bound. There was definitely a great bounce off essentially the VWAP zone, the top of the VWAP zone this week, but still from a longer term standpoint, this is pretty range bound. And is there a lot of edge on the longer term? Not a ton until we break and close above 505.50, or we break and close below the bottom of this VWAP zone, which is currently right around 463. So until then, it's pretty range bound, not a ton of edge. And an edge really presents itself when you have some type of breakout. Yeah, the one thing I will mention is that the MACD is starting to curl a little bit. It did pull back from the signal line a little bit this week just because we had a red week, but still you can see as the MACD line and the signal line are converging, a lot of the time that can signal a potential change in the trend. If the MACD is curling closer to the upside on the signal line is the yellow line, the MACD line is the blue line. Generally, that's signaling a potential reversal to the upside. So we'll have to see how that plays out. Remember that the MACD is not a perfect indicator. You can always have pretty much one of these type moves where it looks like it's curling and then it just continues down. So we'll just have to see what happens with price action and go from there. But for now, we are pretty range bound as the MACD is showing signs of potentially an upside cross in the coming weeks. Tesla had an interesting week. You can see here that the MACD has not really given us much at all. It's been a pretty false signal here. So we did have a MACD cross after we broke out of this diagonal trend zone, but for now, we're really just chopping around and simply just retesting this diagonal resistance zone that we broke out of. So if we do get another red weekly candle here and close below that trend zone, then this SR flip would no longer be valid. Going into the week, the bottom of that trend zone is right around 233. So that's a level definitely to keep an eye on going into the week ahead, at least for a weekly close. The daily levels are definitely a little different, and I have those in the Twitter subscription that I'm watching. It's more of a VWAP zone that I'm watching in the Twitter subscription. So I will be going over those numbers, and I did go over those numbers late in the week before the market closed for the week. Apple has, you usually don't see these types of moves in Apple. At least we haven't in a while, and that doesn't mean they don't happen. It's just they haven't happened really since the fall months. And so we've had 3 red weekly candle closes here for Apple into the end of the year and into the first week of the new year. So we are starting to near, and I need to move this up a little bit to capture this wick. There we go. So you can see here that we are right at this support zone. Now, definitely not the best looking weekly candle at all, but on the shorter term time frame, on the daily candle, there are some signs that we may be nearing at least a short term reversal. I went over those details as well in the subscription with an upside target and invalidation of that upside target. So that's definitely something I'm watching into the week ahead for potential upside. And as I mentioned, those levels are mentioned in the subscription. I will mention here that we do have a gap above, and it's not that common to have a weekly gap on Apple. If you look pretty much since the lows that we saw in early January of 2023, we don't really have any weekly gaps. We had one here from May of 2023, and then we filled it when we pulled back in August of 2023, but we haven't had one since. So the fact that we have this huge gap here, and if you are looking at gaps, you need to use the wicks, not the bodies. So that's one thing when you're looking at gaps, use the wicks instead of the bodies. That's the empty space between the two candles that you're wanting to focus on. And if you draw a simple rectangle on TradingView, just double click on it, go to coordinates, and you'll see here that these are the points that you want to focus on. So the top of the gap fully fills at 191.09. The bottom of the gap is at 188.44. So that would also be potential resistance, but there is a VWAP zone a little below that that would act as potential resistance going into the week ahead before we get up to that gap. AMD is the last one we'll touch on, and AMD's been on an absolute heater the last pretty much since late October, pretty much with the rest of the market. And so we got a pullback. Very natural, very common, and very healthy. You don't want to go straight up, because when you go straight up, you can definitely take the elevator down. So for now, we have an SR flip zone pretty much ranging from 124.60 to 133. And remember, an SR flip zone is essentially just an area that previously was resistance and is now flipping to potential support. And AMD is a pretty volatile name, so this is a pretty wide range. So as you get near the top of the SR flip zone, that's when you, and everybody's going to be different, but the theory behind zones is really kind of almost for a scale-in reason, right? So as we get near the bottom of the zone, maybe that, or the top of the zone, maybe that's when you scale in 1/4 of a position. As we get towards the middle of the zone, maybe that's when you scale in another 1/4 or a half a position. And then as you get down to the bottom of the zone, maybe you scale in one more time, and then you have a very defined risk to reward. You know that if there's a weekly close below the bottom of the SR flip zone at 124.60, then your trade is invalidated, and then you essentially stop out. A lot of people think that, any setup is just 100%. It's not. This is a game of probabilities, definitely not certainties. And that's why there are invalidations. That's why there are triggers, because there's nothing guaranteed. You just have to have some type of system in place that invalidates a setup, and you have to be able to calculate your risk to reward. If you're risking $1 to make $3, then you're essentially having a 3-to-1 risk to reward. You're risking $1 to make $3. So that's something to kind of, to keep in mind when you are looking at picking your own trades and that type of thing. And one thing in the subscription that I focus on is really teaching people how to fish. I'm not someone who's just giving people, hey, get in this name. One, I'm not a financial advisor. Two, that's not helpful for anyone. It's a lot more fun to formulate your own trade and make your own money versus just blindly following someone, because what's the fun in that? If you give somebody credit for making money, then you also have to blame them for not making money or losing money. So that's not the way that I operate. I really like to give the resources to subscribers in order to be successful, give them these areas of invalidations and triggers and targets so they can take that information, use outside resources. Maybe they even have another subscription that they're subscribed to that they can cross-reference information with. And then they take that information and formulate their own trade. That's really how market participants should really participate in the market. And it's a lot better for everybody that way. So that was the weekend update. I hope this was helpful. And as I mentioned, for now, we're just getting a pullback after a huge move up over the last 2 months. Does that mean that we're not due for a bigger pullback or maybe even a potential reversal? No, but for now, we have to take what we have, right? It's like a meteorologist. A meteorologist only has the data points that they have. If it says it's going to rain tomorrow and then something changes, then they're going to say, okay, it's not going to rain anymore tomorrow. So that's the way you have to kind of look at things in the market as well. It's an ever-changing, it's a fluid environment. Things change, theses change, opinions change, and so you have to take what's in front of you, and then from there, as things evolve, then that's how you can formulate or update your thesis and go from there. So everybody have a great weekend. Thank you so much for watching. I hope that this, as I mentioned, is helpful and a resource, but a resource of hopefully many things that you're looking at in the market. As I mentioned, I do have a partnership with Optimus Futures, so if you're a futures trader, definitely give them a look. And if you are interested in the Twitter subscription for only $10 a month, I do have that link in the video description, so check it out if that's something that sounds interesting to you. Have a great day, have a great weekend, and we'll see you soon.